I'm Taylor Riggs in San Francisco, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, Tesla's Cybertruck debut. The demos don't go exactly as planned, but the car's specs are sharp. We'll have the opinion of Loop Ventures' Gene Munster. And growth spurt. Splunk shares jumped the most in a year as sales beat estimates and analysts praise the company's outlook. We'll hear from the CEO. Plus, vulnerable. 1 billion people's data left unprotected on a Google Cloud server. We'll talk to the hacker who discovered it. But first, to our top story. Elon Musk unveiled Tesla's new Cybertruck last night with stainless steel exterior and an armor glass that's not supposed to shatter, but the demo didn't go quite as planned.
Oh my God. Well, maybe that was a little too hard.
For more on the mishap and how shareholders reacted, I want to bring in Bloomberg's Ed Ludlow. You were at the event last night. First, before we get into the pomp and circumstance and the drama, how was the Cybertruck?
So the Cybertruck is this futuristic concept pickup truck that Elon Musk has been teasing for the last 12 months. And it's exactly as he described. Think of the film Blade Runner, the 1980s film, set in November 2019. Of course it is November 2019. And it rolls out on stage. It's boxy, it is big, it has sharp edges, and it looks nothing like a conventional pickup truck. But as you say, the specs are really impressive. On paper, 0 to 60 in 2.9 seconds. It can tow 14,000 pounds of mass, which it makes it genuinely competitive against sort of traditional combustion engine pickups like your Fords, your Chevys, your Dodge Rams. So, you know, on paper, it's this amazing thing. It's just that it's so different from traditional pickups. And today you see these Wall Street analysts kind of a little concerned that for the everyday American who's driving around their pickup, it's just not something for them.
Well, I do want to get to the moment last night when they went to shatter the glass that is not supposed to break, and it did. What happened?
So picture the scene. The Cybertruck is on stage, and Elon is talking about the steel, the ultra-reinforced steel, which Tesla has invented. Chief Design Officer Franz van Housen is on stage with a sledgehammer, and he hits the door, and nothing happens, no mark, genuine success. And Elon turns to Franz and says, throw a ball at the window. So he throws a metal ball at the window and it smashes. It doesn't go through, but it smashes. And as you heard, Elon reacts in a particular way. And he says to Franz, throw another ball. So Franz throws the ball at the window and the second one smashes. And the crowd is kind of awkwardly silent, giggling. And no one's entirely clear if this was supposed to be the case. But this steel that they plan to use is the same sort of reinforced armored steel for the truck that SpaceX is going to use in its Starship. And the glass is supposed to be armored in the same way. And what no one's talking about today is just before the ball hit the window, Tesla did another demonstration where they dropped the same ball onto the same material on a flat desk, and it didn't break.
So then what happened? Did they bring out a vehicle with a different type of glass?
All we can go on is Elon's reaction. We don't know. You know, there are people out there on Twitter speculating that this was deliberate. It's got everyone talking, right? So, but you know, the whole point is that a pickup truck is supposed to be durable.
Right.
If you're going to convince Americans who are driving big Ford F-150s, the Raptors, which can cost $100,000, to buy a new truck that is so different, then it's got to live up to what a truck has to do, which is drive around tough terrain, get banged around, take hits, basically. It's just that this one didn't go to plan.
What are you hearing about the durability of it? And then we have to fold in the pricing. You mentioned $100,000, this, $40,000.
So this is really interesting. The lowest end model, the base model they call it, $39,900. But remember the Model 3. Tesla has been promising us a $35,000 Model 3 for a long time, and we've never actually got there. The average selling price for the Model 3 is nearer to $50,000. And so there's a lot of skepticism essentially out there from analysts that we will ever get a base model. Now, the higher spec models will have a much bigger price, right? And some of the specs are amazing, up to 500 miles of range. It can carry 3,500 pounds of load in the back, which is, you know, you think about a truck has stuff in it, it gets weighed down. But according to Tesla, their truck can still perform with this amazing suspension system. But the question that everyone's asking is it actually going to hit the roads, a truck that people can afford?
Well, I want to get there, but I first want to talk about these events, because you're at the Model Y launch in March.
Right.
You were at this event last night. What is the tone on the ground? What is the hype of these big unveilings, these big events?
So this one was particularly interesting. At the Model Y, Elon was kind of subdued. He wasn't his normal self. There was a lot of headlines at that time around Elon, around the company. But what the company did then in March is a history lesson. It dragged on, starting with the first Tesla Model S right through to the Model X, Model 3, and then they brought out the Model Y. On this occasion, they cut right to the chase. Elon's on stage, he shows a few images of traditional trucks, and then bam, here comes the Cybertruck. And that was what's so amazing, that all of these Tesla fanatics were stunned because they didn't actually expect it to look like that. But I spoke to one woman who has pre-ordered the Cybertruck. She has owned an S, a 3. She currently drives an X. And I was like, well, what's made you order that? And she says she just wants the latest technology. She doesn't care if it's a pickup truck. She just wants the latest EV from Tesla. And that is a big story for Tesla. They might not do as well with this pickup truck. It might not be their big winner, but at least it keeps them in the game. And there's this race going on for entrance to the EV pickup market. You have Rivian coming in 2020 with its $70,000 pickup truck, the R1T. Ford wants to electrify the F-150. It's getting competitive. But what we do now about this Tesla Cybertruck, it's not going into production until the end of 2021. So it looks like they've surrendered first advantage to get the first EV pickup.
So interesting, tone on the ground. I love it. Thank you to Bloomberg's Ed Ludlow. Now, Travis Kalanick just will not stop selling his Uber stock. The company's co-founder has now sold almost $1.5 billion of his shares since the lockup ended earlier this month. That includes a $570 million of stock that Kalanick sold off 3 days this week. And in a filing, Kalanick signaled he could offload his entire stake. For more, I want to bring in Bloomberg Technology's Eric Newcomer. Eric, thoughts on the sell-off? Is this concerns about the company, or he just wants the liquidity?
The stock market doesn't seem to be taking it as a huge negative signal. I think it's been up lately, but to me, Travis Kalanick understands Uber more than anyone practically. I mean, arguably up there with Dara. Obviously, he's not running the company anymore, but this is the man who built this business. So the idea that he's selling it, I think, is a signal that people should watch.
I also want to talk about a different story that you were writing today about dashboard cameras. While it's raising some privacy concerns, I wonder if it is good for these Uber cars to have these dash cams and help boost safety and security. Your thoughts?
Right. I mean, Uber has this classic, privacy versus safety trade-off. Do they sort of create a surveillance state so that they have a record if anything happens, and then sacrifice privacy? Or it's a tough choice, and I think the more Uber watches this, they're worried about safety and trying to make moves that show that they're doing everything they can to make sure the Uber experience is safe, and realize that they're going to be held accountable. Even though Uber says these are independent contractor drivers, they know that their reputation is on the line based on the experience that customers have in a car. So I think that's why they're really trying to consider this surveillance effort. And then it's also a global company. So I think, they can look at it all over the world and say, what places are welcoming to a little surveillance so that I have a better sense of safety, and what places aren't. So I think it makes sense for them to look at it.
Eric, is the audio and video optional? Can the driver turn it on, turn it off? Will I, as a passenger, know when it's on, when it's off?
Yeah, I think Uber is giving choice here. I mean, this is early. They're experimenting with it, but I certainly expect that users will be able to sort of set their preferences. But I think it's probably going to depend on region, regulations, all sorts of questions. But yeah, I think giving sort of drivers and riders. The problem is you have a driver and a rider who can't necessarily come together to agree on what they want. But I think Uber has to give people options here.
Thank you to Bloomberg's Eric Newcomer on Uber.
Thank you.
Now, shipments of Apple's popular AirPods wireless earphones are expected to double this year. Bloomberg has learned that the company will ship 60 million of the devices. That's been driven in part by much higher than expected demand for the pricier AirPods. Those were the models unveiled last month, and they cost $249. Chasing bigger deals, we speak exclusively to the CEO of Splunk, fresh off earnings. We'll hear about the company's new pricing strategy that could reel in those software dollars. This is Bloomberg. Splunk is the world's first data-to-everything platform. Its software collects machine data and provides insight into businesses worldwide. The company shares rose as much as 10% on Friday, its biggest gain in a year. And this is as analysts cheer the company's third quarter results. Joining us for an exclusive interview, it is Splunk President and CEO, Doug Merritt. Doug, great to have you. Busy day, so thank you for taking the time. I wanted to talk about this new pricing model, the volume-based and then booking the revenue annually instead of on a multi-year basis. Both of those analysts love today. Why the change?
One of the biggest issues we've had with Splunk is you get so much value out of the platform, and it's a data volume-based product that people get scared on how much volume is going to go through. And we've heard for years that the lack of predictability is something they'd want to have a better option around. And so we came out with two pricing metrics a month and change ago that were one's an enhancement, one is new. The enhancement for data volume contracts is we've tiered the pricing and really condensed the tiers into much broader bands with an unlimited option at the upper end of that pricing curve. So now if I start with 100 gigabytes of data per day and I start to see the value and I can see 100 terabytes, I know what my price is going to be and I don't have to be scared about the data volume. The alternative, which is probably more fundamentally appropriate long term, is just the amount of infrastructure that you need to operate the product. So we've got a virtual CPU and a virtual core option. We rolled both out because the way that you use the product could make one more advantageous for a customer versus the other. And customer success truly is our number one corporate priority, and we want to make sure that customers have the optionality to choose the best option for them.
I want to come in to show you a chart that I'm showing inside my terminal for our Bloomberg audience. If you come in, GTV Go, basically showing for the week you're up 17%. You're having your best week now all year, going all the way back since last November. How much of the changes did you talk about today, introduce in the last month, are also helping boost that forward guidance? Because that was a big issue for analysts today.
Yeah, we're really excited about the results, the way that the results are being accepted, because you never really know on an earnings call how people are going to receive it. I think one of the bigger breakthroughs that we drove is we've been transitioning the company from a largely perpetual license model to a term and cloud model, and that can wreak havoc on the financial statements, and it's a big shift both for our customers and the investors. And this quarter, we released an annual recurring revenue metric, and we went back 5 quarters so people could see what did it look like in the distant or the recent past, and then where are we today? And being able to show people that we grew annual recurring revenue at 53% year over year and have a $1.44 billion ARR capability or metric within the company, I think really helped people to be able to cut through the GAAP-based revenue versus what do these annual contracts look like that term and cloud contracts are surrounding.
If there was a negative piece of information, free cash flow was about $30 million more negative than analysts wanted. Operating cash flow seems a little bit negative, but you're looking to make that positive in a few fiscal years. What are investors missing that you'd like to clarify about those numbers?
I think what they got this time, because we walked them through cash flow the past 2 quarters, is that really is a timing issue. That as you move from perpetual, where everything's paid up front, and we had perpetual licenses to keep it consistent, would ask the term license be paid up front. As we shifted to term and cloud, we allow people to normally pay as they would with any term contract, which is annually, which obviously has a big impact on cash flow. And we declared it as a timing issue, but we weren't able to drive a model with enough clarity to give confidence in the forecast of the street. And this quarter we leaned forward, showing that we anticipate $1 billion of positive free cash flow in FY23, 2 fiscal years from now. And we'd always said it was going to snap back, and it will be back in the upper 20% range versus revenue. And I think that helped people understand that snapback.
You recently made $1 billion acquisition of Signal FX. Going forward, what could I look for in terms of organic growth versus acquisitions? What % will be both?
We have largely been organic growth, and even the Signal FX acquisition, which we're super excited about. The revenue from that company is not that large versus $1 billion acquisition price, but it enables us to get into this hot new category around observability. That as people move workloads to the cloud, it's really hard to look into the applications to see what's happening in the cloud. And the combination of a bunch of really cool organic products we've been pushing out, this data stream processing product that people are very excited about, with things like Signal FX and a smaller acquisition called Omnition, really provides the ability for our customers to get deep understanding metrics and health of applications on those cloud workloads. So I think that combination is going to result in some interesting revenue and some interesting customer success in the coming quarters.
Splunk's Doug Merritt on all things Splunk. Thank you for joining us. And still ahead, we will hear from the Infosys chairman on who he thinks will be the leader in the 5G race and why. That's next. This is Bloomberg. Infosys Chairman Nandan Nilekani says 5G is the next strategic frontier of telecommunication, and he believes that the U.S. is going to be the leader in it. He spoke with Bloomberg's Tracy Alloway at the New Economy Forum in Beijing. Take a listen.
Well, I think if you see 5G as the next strategic frontier of telecommunication, and if you believe that it's going to drive a new cycle of growth and it's going to come up with very diverse applications in many industries, then the building blocks of that, where do they come from, become more and more important. And I think the current issue between the US and China and so on, I think who are the suppliers, whom does the network buy it from, become very important. So basically what we will see is, I think in areas where the US has influence, it will be driven by firms like Ericsson and Nokia. In areas where China has influence, it will be driven by Huawei. And some countries will do both. They will choose from both.
I'm curious how India fits into these tensions between 5G suppliers. Are you going to choose one side or the other?
Well, I think that's still up in the air. And right now, our telecom industry in India is going through major changes. They're faced with high taxes and so on. So they are actually dealing with more short-term issues. And I think we still haven't had the 5G license auctions yet. So I think 5G in India is still some time away. And also there's the whole issue of what are the applications. I personally feel that the US is going to be a great place for 5G. And there's a historical reason for that. When AT&T did the consent decree with the Justice Department 20 years back, they essentially had the divestiture where they had the bell operator, they're the long distance company, and 7 so-called baby bells. And each baby bell had a physical footprint. So 9X was the baby bell in New England and Pacific Bell in California. And over time, they all combined into 2 companies. So Verizon owns half of those older baby bells and AT&T the other. But what happened is that each of these companies now have a physical footprint of fiber, and they could not enter into the markets of the other because it's quite expensive to lay fiber to the home. But what 5G does, it gives you fixed wireless. It allows you actually to go to the home and offer wireless with the same fiber kind of capability. So now you see, each of them challenging the other in their territories. Verizon is leading. They're already in 8 cities in the US. So fixed wireless, which is a very US-specific requirement, I think will drive massive 5G in the US. And that's a very immediate need, which will generate a lot of revenues for the telcos. So I see fixed wireless in the US. Not all this newfangled stuff, autonomous cars, all that is great. But fundamentally, fixed wireless will drive US consumption. And I think US will actually be a leader in 5G.
That was Infosys Chairman Nandan Nilekani at the Bloomberg New Economy Forum. Now, the New Economy Forum is organized by Bloomberg Media Group. It is a division of Bloomberg LP, the parent company of Bloomberg News. Now, China used to be a technology laggard, but now it's a pioneer. Carlyle Group co-founder David Rubenstein spoke with a number of tech executives about China's entrepreneurial strength at the Bloomberg New Economy Forum.
So if I wanted to invest in young artificial intelligence companies, should I go to China to find them, United States, Israel? Where would I find the best one?
Yes.
All of those places?
Yes, and in fact, we released a study a couple of weeks ago about where AI was in the global scene, and there are a number of countries that are leading. There's no question that the US is the farthest advanced. However, China has, as a national priority, made leadership, or at least co-leading, in AI a huge priority for their STEM-related fields. They're producing many, many more articles, patents, computer scientists, and so forth. There's every reason to think that China will be a leader as well.
Now, do you think women have as good a chance to rise up in technology companies as men in China?
Sure, absolutely.
And therefore, you go out of your way to hire women, or you don't go out of your way because they're equally talented and you're just going to get the cross-section anyway?
I think, first of all, women need to, get rid of the glass ceiling concept. And secondly, as a corporation, we should create a more friendly environment for women. For example, a lot of them, when they give birth, we create a, work from home environment for them. One technology which I would really look forward to is to invest in AR or VR. I think Tencent should totally do that, so that, you can replicate this atmosphere at home. You can have the full experience at home. And this is emotional, right? Like the Bloomberg Forum is emotional, right? If we can replicate this at home, right, it empowers all the women, and I think it solved all the problems we talked about at this forum. I think, when technologies, can really empower a lot of things, including women, women's career.
The China dispute with the United States on trade, you're probably familiar with it. Has it affected you in any way, or do you really care whether it's resolved in the near term, or it won't affect you one way or the other?
Well, it hasn't affected us per se, but then it's actually kind of dangerous, right? The way it is going, right? And if there is really going to be additional sanction, or the two countries actually go further apart, because I think if you look at technology advancement, right? What we're talking about is innovation, right? Innovation really happens when people collaborate, right? Even if you look at China, the tech industry, right? It's really built upon a lot of grassroots entrepreneurs, right, who know about the market. But at the same time, right, there are a lot of engineers and entrepreneurs who have had experience in the States and come back, and the capital, which is funding this growth, right? Like your very company, right? Actually, sort of, a lot of them are associated with the States, bringing in experience, right? So this kind of biodiversity is actually very, very important for innovation.
That was Carlyle Group co-founder David Rubenstein at the panel at the Bloomberg New Economy Forum. The New Economy Forum is organized by Bloomberg Media Group, a division of Bloomberg LP, which is the parent company of Bloomberg News. And coming up, our look back at the week in tech, from Apple's pleas to the President Trump, and they continue to struggle the struggles of WeWork. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. And now we get to take a look at our weekly top tech stories, starting with Apple and its effort to get President Trump to cut it a break. CEO Tim Cook gave President Trump a tour of their Austin, Texas plant, and it wasn't just to show off some Mac Pros being built in the States. It might have been to stay in the president's good graces, as Trump took a moment to say he's looking at exempting Apple from tariffs on goods imported from China. Joining us to discuss this and so much more from Minneapolis, Loop Ventures managing partner Gene Munster, and in New York, Bloomberg Opinions, Shira Ovide. Shira, I have to start with you because you wrote a column this week and the title was my favorite. Apple's political savviness is an undervalued asset. Explain the political savviness underway at Apple this week.
So this is an ongoing story, but Apple's been very clever about both personal diplomacy with President Trump and President Xi in China, that you've seen Donald Trump say repeatedly that Tim Cook is someone that he trusts, and that he can pick up the phone and call Tim Cook. And to Apple's credit, that gives the company's views kind of a fair airing in the White House. And Cook is also the kind of person, and Apple's the kind of company that they've been smart about kind of rebranding money that it already spends on things like data centers and on parts for its devices, and basically coming up with a very large number and touting that as Apple's contribution to the U.S. economy. And again, for somebody like President Trump, who likes to talk about his contribution to the U.S. economy and his efforts to bring bring a manufacturing revival in the United States, those words from Apple are music to the president's ears.
Jean, we saw the Apple PR marketing machine underway this week. Austin's a no-name factory, if you will. I mean, a few Mac Pros, but we're not talking about building the iPhone at that factory. And yet, he's gotten in President Trump's seemingly good graces. Do you see that as an undervalued asset when you take a look at Apple?
Absolutely, and just to put some context to that, we're talking about 1% of Apple's business is this Mac Pro, this high-end computer. And so, yes, it's an undervalued asset. When we think about this relationship, it is a relationship that both benefit from. It's very clear to look at how Apple benefits from some of these exclusions from tariffs. And not only that, but as we go forward, I think being in the good graces of the administration should help with future tariffs, as you've outlined, and even next year, however that plays out. I think that the separate piece on that is this helps Trump obviously as well, just building his brand around what is globally respected, one of the most respected companies globally. And so I think Tim Cook, if we rewind the last decade, is that he came in being really known as being an operator. And now he's, I think, become a statesman. And I think that there's two other phases to Tim as the next, I think, as an innovator, and I think he will ultimately get credit for that. One last piece, slightly off topic, but important about Tim Cook, is that an aspect that largely gets overlooked, he stays out of trouble. And as simple as that, if you look at other tech executives, I think it is part of his underappreciated, potentially the world's greatest CEO.
Jean, we switch from the operator to the basic fundamentals. Can you remind me of your base case as it relates around tariffs? If there is not an exclusion, how does that change the profitability of Apple?
So as it stands today, there's talk of 10% tariffs coming in December that will impact the majority of their products. U.S. accounts for more or less a third of overall revenue. Taylor, I don't want to give you a specific answer, and part of it is that there are so many layers between that. I think if I throw an answer out there, it would just simply stoke some concern, some fear out there, or may create too much optimism. It's hard to say, but I think this should be the simple takeaway, is that what happened this week would not have happened if it wasn't for the December setup looking good for Apple. And I think ultimately there will be very few or no tariffs levied against Apple in December.
Interesting. Shira, I want to switch gears here and go over to Facebook and Google political ads. This week, Google changed some of their political ads where they came out and they said that they'll restrict misleading info and as well as ban candidates from targeting election ads based on people's political affiliation. Where does that now put Google relative to a Facebook and a Twitter?
Well, I think in a way, Google found a little bit of a happy medium. So I think to Google's credit, right, they quietly went away, waited out what all of the fire and brimstone that Facebook had been facing the last few weeks and months about political ads, and just kind of quietly redid a lot of their rules, both around political advertising and some other advertising bits in general. And to me, the big deal is the restrictions on ad targeting for political ads. So things like that candidates and companies do quite often, which is to take email lists, people who've signed up to support a candidate, or people that companies already know who are their customers, and Google and Facebook both allow those companies and candidates to target those people with ads on their sites based on email lists that companies and candidates already have. So that will no longer be an option going forward for candidates. And I think that's potentially a pretty big deal. And I think you saw Google getting some credit from from people who had been critical of Facebook and allowing kind of more or less freewheeling political ads of all kinds.
Jean, how much more pressure is Facebook under?
Relative to Google, I think they're under a similar amount of pressure. I mean, these two companies are front and center when it comes to regulation, some changes to the business. Not surprising to see both of those companies this week start to move ahead, give some better, basically curb some of the tools that can use for hyper targeting that we've talked about. So the simple answer is they're under a lot of pressure. As I think about the changes this week and think about how those changes could pressure their overall business, it is modest. I mean, we're talking about some very small tweaks to this political machine. I am not a fan of Facebook. I'm old, I'm 50, I don't think it's good for the platform. That said, is when I meet with advertisers, they can't get enough of this. And when you talk to political campaigns, they also cannot get enough. There'll be approximately $3 billion spent in 2020 on Facebook and the US elections more broadly. It's incredible, the type of spend. Yes, this is a certain amount of pressure on Facebook, but there is still a massive opportunity for Facebook and Google related to political advertising.
I want to switch gears again. Shira, if you come and take a look at a chart that I'm showing inside my terminal, it is all WeWork all the time. This time bonds now down to near a record low, 71 cents on the dollar. And this comes this week, even after they're laying off 2,400 people in the U.S., 20% of the global workforce. Is this a company that is correctly now right-sizing itself?
Yeah, I don't think WeWork really has a choice, that it now has this enormous financial cleanup job from what has been basically an unrestrained growth binge. So this is a company that has a couple $2 billion in annual corporate overhead, which is pretty close to 3/4 of their revenue, just cash overhead operating costs. And that's a significant cost base that they need to cut. Obviously, there's a large human toll. Thousands of people are going to lose their job, and that's very painful for those folks. But the company has to get its costs under control. And then even after that, they have a lot more work to do.
You know, Jean, we heard from WeWork today, and according to a person familiar with the matter, they want to expand in a profitable way. They want to be adjusted EBITDA positive by 2021 and cash flow positive by 2023. Your thoughts?
I think they've gotten religion, and I don't think they're done with the cuts at this 20% level. I suspect that number will drift higher over the next 6 months. Maybe ultimately a third of the people, unfortunately, won't have a home there. So I don't know the specifics of the plan. My sense is that there is so much focus within SoftBank and WeWork to get there. They will find a way to get there. It may include shuttering office space, but I suspect they will find a way to get there at the cost of top-line growth.
Hands down, my favorite part of the Friday. It's our Week in Review. Thank you to Bloomberg's Shira Ovide and Jean Munster. You're going to be sticking around with me. And coming up, Tesla's breaking news, how investors are reacting after Tesla's shatterproof armor demo didn't quite go exactly as planned. This is Bloomberg. Since Disney's successful launch of its streaming service next week, much has been made over how exactly it will affect the competition. Well, now we are getting an idea from Netflix. Internal data at Netflix suggests users are not fleeing to Disney Plus, according to an unidentified person at the company. Because of proprietary information, Netflix subscriber cancellations have not accelerated recently. Last week, Disney Plus launch, it was widely successful, signing up 10 million subscribers in just one day. Now back to our top story. Elon Musk probably would have liked to have a do-over. He unveiled Tesla's long-awaited electric pickup truck last night, but it didn't go as planned. 2 of the truck's armored windows were shattered, and for a while, the truck was the #2 trending topic on Twitter. Not always good for publicity. For more, I want to bring in Bloomberg auto reporter Gabrielle Coppola, and still with us, Loop Ventures' Gene Munster. Gene, you addressed this in your note today where you said it has captured headlines, but we're missing the story. What's your take?
It's symbolic. The glass breaking is symbolic, really, of the Tesla story, which is twofold. One is trying to disrupt the status quo. You just would never imagine not only just the glass incident, but if you even rewind a few minutes before that, what was going on during that presentation, you just never imagine any company doing that. They do disrupt the status quo. Their cars are disrupting the auto industry. So that's the one piece of it. No CEO in their right mind would have done what Elon did with that. Separately, it's also representative of who Elon is, making some quick judgments that may not be in the best interest. I think about what's happened with Twitter and Elon over the last year and a half. And unfortunately, you have to take the bad with the good. When I watched it, it was painful to watch. And as I stepped back and kind of processed it and was talking to people more about it today, I think that incredibly, you're going to think that I'm tone deaf here, but I think there was actually a silver lining because some people thought it was really funny.
Well, Gabrielle, let me bring you in here because it might have been painful to watch in Gene Munster's words, but the fact is we are all talking about it today and we can't stop watching that video. Is that in and of itself a little bit of a success for Elon Musk?
I think so. I mean, I definitely don't think smashing the window was intentional. I don't know if that was a success, but I do think that the sort of radical nature of this car, the design of this car, it's drawn everybody's attention. In that sense, it is a great marketing success, I think. And I even spoke to a professor of design here in Detroit who said that he thinks it might actually even be brilliant. It depends, you know, the market will tell the tale, but it is seeming to appeal to a certain niche audience.
Well, and Gabrielle, let's talk about the appeal of that design. It's futuristic, helpful or hurtful for future buyers?
You know, definitely not something that appeals to traditional truck buyers, and I think that's why you saw Tesla's stock fall today, because the street was looking for something that could actually pose a real threat to Ford and GM and Chrysler, and I don't think anyone seriously thinks this is, but it does appeal to people who are into video games, and it is sort of just so. An interesting comparison was, think about GM's Hummer or even the Jeep Wrangler. Those are extremely functional, almost sort of, I mean, in the case of the Hummer, almost like an ugly but good-looking car that both have had extremely strong cult followings. So Elon, by taking that even farther, you know, extremely off-road, it might actually appeal to some people with the bragging rights that it provides.
Gene, who buys this? A Tesla lover or a truck lover?
A Tesla lover. I think this is going to capture a very small segment of the pickup market, very small, emphasize that. I think there'll be an SUV segment that will be captured within this too. It's 4 doors. I think that this kind of tech-forward type of person is going to initially be purchasing it. When we put it all together, this is how we think about the math, is that this product could add, we're calling it 5% to the overall business from kind of that weekend warrior, techie type of a person. Surprisingly, the car is, I think there's actually a lot of value in the car. Before they announced the price, my sense was that it was going to be closer to $70,000, and ultimately the average selling price may be closer to the mid-50s. So I think that they are trying to answer your question, open this up so it is relatively affordable. And ultimately, as I said, it should account for, call it 5% of overall deliveries for Tesla.
So, Gene, with the price tag right now that's about $20,000 lower than what you were forecasting, what does it do to the composition mix of profitability? So the last time you and I spoke, we talked about we wanted to see more S's and X's, high profitable vehicles to make up for a lower margin Model 3. Where does this new truck fit into that scheme?
I suspect this is going to be towards the very low end of the profitability. In part because if you look at what's happened with Model Y, for example, that's going to leverage a lot of the same manufacturing process and components of Model 3. In this case, we have a whole new vehicle design. It's a departure from their classic design language. And so I think that, and I feel like given some of the specs that there is, I didn't see the interior of it, but my sense is that there is going to be some good value here, which is usually representative of a little bit lower margin. The good news for Tesla is that they don't need the cash like they did 2 years ago. They got $5 billion in the bank. They're only taking $100 reserves on this. And I think that 2 years away is so long that they don't have to worry about that gross margin question on Cybertruck yet.
Gabrielle, you heard a production target there of about 2021. I steal this from a co-anchor of mine who said that we have to account for a Musk-adjusted production target. Do we really believe 2021?
I think Tesla has come a long way in terms of getting its production ramped up. So, and also the other timeline to think about there is that both Ford and GM are going to be coming in 2021 with their electric pickup trucks. So I'm sure he won't want to miss it by too much, because that's when the kind of copycats are going to be out there trying to compete with him.
Fascinating. Loop Ventures' Gene Munster and Bloomberg's Gabrielle Coppola. Thank you both for joining. And coming up, your data's out there, and it is unsecured. We speak to the cybersecurity expert who found over 1 billion people's data just sitting out there on an unprotected server. That's next. This is Bloomberg. Imagine a database somewhere that had all of your social media accounts, email addresses, and phone numbers. Well, that is what one cybersecurity expert discovered last month. All that data for 1.2 billion people just sitting out there on a Google Cloud server. But how did it get there, and what was it being used for? To answer that, let's head over to St. Louis, where the man who uncovered the server is standing by. It's Vinny Troya, the founder of Data Viper. Vinny, I have to ask a very basic question. How did you discover this?
To be honest, this is just part of a normal research process where we were just looking through open web servers to look for any databases that potentially have valuable information in them, and we just kind of came across it.
How does this breach, if you will, fit into all of the other data breaches that you've discovered in terms of size and scope? We hear 1 billion people and we sort of freak out. Where does that fit in your world?
So I would say this is probably among, one of the largest that I've probably ever discovered, maybe largest that anyone has. It was so large in size that the initial size that we uncovered was actually 4 billion records. And once we started to deduplicate a lot of what we found, we kind of whittled that number down to 1.2 billion, which is actually fairly significant.
So talk to me about the relationship between the Google Cloud and People Data Labs, because you said that most of this data was collected by a company called People Data Labs, but it was being held on a Google Cloud server. Explain those to me.
Sure. So People Data Labs is an enrichment company, and what that means is you can send them an email address and get back an entire user profile. They're essentially data brokers. Now, what's interesting about this is that People Data Labs didn't actually suffer a breach, at least as far as I know. They most likely sold that data to a customer legally. I mean, they had contracts in place, and that customer would have kind of mishandled that data and had it on an open Google Cloud server.
And no thoughts on who that customer may be or what the data was used for?
Unfortunately not. I mean, this is something that we won't, I don't think, ever have visibility into. I mean, I personally notified the FBI once I found the server and they were able to get it taken offline, but they're under no obligation to disclose who owned that server, and because of privacy regulations, Google won't disclose who their customer is either.
Who should bear the responsibility for this? Is it Google, is it People Data Labs, or is it that third unknown party?
I think it should be the third unknown party. What we lack currently at this point is some sort of regulatory body that will actually go out and force the company to admit their mistake, which currently we don't have.
Do you want to see that type of regulatory body?
I do. I mean, and I think, there was a recent article by ABC with Tim Cook where he was discussing all of the different, the need for additional privacy controls and privacy legislation. I think that's something we're sorely lacking, because when you look at not only the size of this data breach, but also the content, I mean, having everyone's social media information from Facebook, Twitter, LinkedIn, GitHub, is, in my opinion, much more significant than having their passwords because of all the single sign-ons that you're seeing more and more. People can sign on to services with Facebook, sign on with Twitter, and so having a password isn't as relevant anymore. And now when I can associate a phone number and an email address with a Facebook or a Twitter profile, that becomes much more valuable in the eyes of an attacker.
And is that what makes this data so scary? Because we don't need the passwords anymore. They have all the information they need? Correct.
And so, the other thing too is we really have no visibility or no control into what data is being collected and how it's being sold. Again, going back to the Tim Cook interview, he mentioned that Apple doesn't want to make money collecting their data, and that's true. It's not the big companies that we really need to worry about. It's these little data brokers like PDL and like so many other companies that are just collecting volumes of information that we have absolutely no visibility into. And then on top of that, we have no visibility into who they're selling the data to and who they're selling the data to and how how that company is using it. So I think that's kind of where the regulations need to step in. What data is being collected, and then how is it being used?
Oh, so much. We could go on and on. Vinny Troya, thank you so much, of Data Viper on all things cybersecurity. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.